Hey everybody, it's Pete. Good morning. Today we're going to talk about something very interesting, which is profit taking. But more specifically, yesterday we talked about risk reward and exactly how to determine the reward potential based on the risk you need to take. And then we kind of factored in the probability of that target being hit. Today we're going to take a little bit different approach to that. We had a really good question in our private coaching call last night in the boot camp. By the way, if you'd like to learn more about the bootcamp and getting my real-time entries and exits, click down below it, and you'll see how the members in the community are doing. It's a question of day trading versus swing trading, and which ideas are day trade ideas versus which ideas are swing trading ideas. I understand the question because I absolutely did that when I first started trading 20 years ago now. We only looked at one thing. We looked at a level 2 box and we looked at a 1 minute line chart. And I'll show you what that means in a second, just to give you an idea of the exhaustion that comes out of trading that kind of activity. We would do anywhere from 50 to 75 to sometimes 200 trades a day because we were just looking at that micro window. We were looking to buy on the bid, sell on the offer, buy on the bid, sell on the offer, and just keep doing it over and over and over again in that most immediate time frame, in that most immediate window of right now it's going up, right now it's going down, that kind of thing. But we developed a much easier way over the years without having all of that stress. It makes it, in my opinion, 50 times easier to whether you're a day trader or a swing trader to identify good ideas. And here's really the secret. And I want to discuss this first, but then I want to take it into a different layer. If you understand order flow, that means that you're finding ideas where the smart money is leaving footprints. You're finding ideas where it's obvious the smart money is accumulating a position. And that's one of the 4 stages of price action that we discussed. It's obvious that right now you could look at that stock and you could say, buyers are definitely in charge of that stock. I want to be on board. Now, here's the key. And this is the part that gets a little confusing, which we're going to clarify that right now very simply. It doesn't matter if it's a day trade or a swing trade if you identify those stocks. If you identify a stock where smart money, where the institutional order flow is clearly pushing that stock higher, that stock should be a day trade and a swing trade. Now, everybody doesn't day trade. I want to make that clear. This is really more a question of if somebody does both. It's not one stock is a day trade and a different type of stock is a swing trade. If you like it because you've identified smart money buying, then it's just a question of you determining if you're a day trader or a swing trader in that same stock. Because if it already is clear, even if you're just day trading, you're going to sit back and say, okay, the smart money is pushing the stock higher. Until I see that change, I'm just going to sit here and only day trade that stock in that direction. You can still take those same trades as swing trades. So here's the point that I want to get across. Point number 1, actually. All trades that we call out in the boot camp, all trades that we call out in order flow mastery are first and foremost swing trades because we're identifying them on the higher time frames, because we're looking at order flow on the higher time frames. So I want to get that clear. If you're watching this right now and you have a full-time job and you're wondering, all of this sounds great, but I'm not a day trader, it doesn't matter. All of the ideas that we call out in the game plan meeting, which we have every day at 8:30 in the morning, they're all swing trades first. So you can take advantage of everything that we do, even if you have a full-time job, because we're first looking for ideas that can go from here to here over the next 3 to 10 days. The only distinction that would make you say, that's still a great idea on the higher time frame, but I'm not going to swing trade it, is because of how far and how fast it's moved recently. So again, we talk about this every single day, and I want to drill this point home because it's critically important to success. Because most traders who come into the boot camp, their number 1 problem is timing. They're timing their entries too late. They're getting involved after a stock has already gone up 5 days in a row. And they're like, yeah, I came up on a scanner last night. I can't wait to buy this stock tomorrow. They buy it, and the stock rolls over for the next 3 days, pauses, and then members of our community are buying it because now it's the right time to look for a new swing trade. So here's the thing. Every stock is a swing trade candidate. The only idea that it's not going to be one that you swing trade is because if this is the profit potential, again, let's just use random figures, right? if this is the swing trade profit potential, so you've identified over time, over the recent window that we look at, that we teach, order flow and tape reading, you've identified as a swing trade candidate, right? It's super obvious over time. But if this is what the stock normally does, and now day one has gone, day two is gone, day three is gone, day four is gone, and I'm just using random day amounts, you shrank the swing trade potential for what that stock would normally do. So despite the fact that it having swing trade criteria, meeting all of the criteria, if it's already gone too far recently, you've diminished the profit potential, which means you shouldn't justify the risk, because you're probably going to make a dollar, risk a dollar to make a dollar, and that's not a good swing trade. We want to get back involved when that's expanded. However, because we've identified it as obvious, because we've identified it as clear institutional order flow, the smart money is involved in that stock, you can still day trade that stock because it still meets the criteria. You're not trading it for the next 5 days, you're trading it maybe for the next hour. So as long as it meets that criteria as a good swing trade, you can still day trade it. Now, there's obviously exceptions, but we're not looking to trade. We're not looking to build a strategy around the exceptions, because you don't know. It's literally an exception. You don't know when that's going to happen, but you do know what's probably going to happen most of the time. And that's where trading conviction comes from. That's where you expect to make money every day, because you know exactly what you're looking at. And I'm going to show you two examples of recent charts now and exactly how you can trade it. I want to bring up one other point. Let's again say that the stock is here and you've identified it as a good swing trading opportunity. So that means you can also day trade it. And the profit potential is up here. Something that non-full-time traders are not aware of is a full-time day trader, somebody who's in the market every day but closing their positions at the end of the day, which I was for years. That's how I got all this gray hair. Trying to figure out what I've made easy for everybody in the boot camp is, if this is the distance and you identify this as a good swing trade, a swing trader will buy it here looking to get to the profit target. A day trader will buy it on day one and keep buying it, and then get out at the end of the day. And then day two, do the same thing, day trade it during the day, and then get out of it. Day three, so you're trading in that same profit window. You're just trading it with different business plans. One's a day trade to close and get flat at the end of the day. Get flat means that you're not in a position anymore. Also, get flat means that you got in and out at the same price. Swing traders will do the same exact trade, but they'll hold it over that time, and they'll expose themselves to that overnight risk in exchange for the bigger profit potential. Day traders are not looking for that overnight risk. They're just looking for obvious order flow with volatility and volume. So it's kind of interesting that it's the same play. You just need the context, which we call tape reading, to understand whether or not it's still a valid swing trade. So I just wanted to clear that up, because I think it's a very important point to make. That first and foremost, we in the community, me with order flow and tape reading, we are first looking for ideas that we love in the bigger picture. And then it's just a question of whether it has room to go as a swing trade, or whether or not we're only day traders looking it up to that window. But what's interesting is I want to go over to the chart, because there's another distinction that I want to make that I think is pretty important. So, and that's volatility and recent volatility. So if we take a look at SNO right now, and we're going to look at this window specifically, you can see that we are actually climbing, right? We're going higher, going higher, going higher, going higher. As we start to go higher, this is where you would expect, just as a super basic 101 technical analysis, this would be the area that you would expect profit taking to come in. That would be an area where you might expect some resistance, right? Where sellers did something significant last time, that would be the level. So that's the expected profit target. But you can see, obviously, there are exceptions to the rules, but that's not so much what I want to point out right now, because I don't want you to think about the exceptions, say, oh, well, what if this time is the one time it doesn't? This is the area where I'd be looking to scale up and having my trailing profit move higher and higher and higher as it gets up to that level. But I'm not getting out as a swing trade, because it could continue. I am moving it up with price action. But now there's another distinction I want to make here. As you start to move higher into what is perceived resistance, where sellers did something significant last time, this is where you start to diminish the potential of a swing trade up to that level. Do you understand what I'm saying? So the higher it gets into that level, where you expect it to reverse, or at the very least profit taking come in, that would be where you would start to move up your trailing stop. And if you get hit, you book your profits, because that is where the stock reversed last time. Now you can see that, which is interesting, and this is the whole point of using this as an example, it did go through there. So what happens here between the day trader and the swing trader? Well, the swing trader is moving up their trailing stop loss, not necessarily bailing out on a position, but you're not initiating a new swing trade as it gets higher and higher into the profit potential, and especially after it expands past what it normally does, because that's not what normally happens. So literally in our game plan meeting yesterday morning, our private game plan meeting, not the social media videos, we discussed that we liked the stock. We would still day trade it if it met the criteria, meaning it was still strong like these 2 days. But we would not be initiating a new swing trade because the swing trade potential diminished. And you can see what happened yesterday. The stock actually had almost a $25, almost $30 reversal yesterday on a day when it expanded through that level. So it's kind of cool to visualize and give you an idea of what we're talking about here. And I just want to bring home the other point as well. If if we're looking at this as profit potential, and if you're a day trader down here, you'll day trade it on day one and get out. You'll day trade it on day two and get out. You'll day trade it on day three, all the way up to this level. Now you'll continue to day trade it as long as it meets the criteria, but you're not looking to initiate an overnight. So very fun to slice and dice the market up the same way with whether or not you're an overnight swing trader versus you're a day trader. It's the same idea. I just want you to be clear in your mind that the only mistake that most traders make, and especially those that are passionate and can't wait to get involved, and they're learning about running scanners and whatnot, is they're chasing price instead of letting price come to them for the proper risk reward ratio or the proper profit potential too, as a matter of fact. So it's a subtle distinction, but it's super important, because you're buying the right stocks at the right time. And that's where trading becomes fun, because now you're not chasing anymore. You say, I want it at that price, or right now there's plenty of room to go, so it justifies the risk. Or you might look back and say, I'm a swing trader and it's too close to what it normally does. So if I put a trade on today, the odds of what it normally does is that at this point, it's going to stop and roll over. I purposely put up snow as an example so that you can see sometimes it does go through there, but your trade management, the way your business plan, your trading plan unfolds, it's important that you trade it the same way all the time. Never worry about leaving money on the table. Try to be better next time and see if there's something you could do. Every trade is a lesson. However, every time you exit a trade, whether it's a profit or a loss, especially on the profit side, because those are the ones that we kind of beat ourselves up for most of the time. If you could have done better, you would have. Remember that. Be nice to yourself and be your own best friend. Be your best trading coach while you're in positions, because we get inside of our own head and we can beat ourselves up pretty good sometimes. If you got out of a trade that you believe you got out sooner, just do an evaluation after the market closes and say, could I have seen something differently? And here's a big thing that we'll end this video on. The more distinctions you could make, the more things you could notice, because you have the stock, you have the industry group, you have the sector, you have the market, and then you have the market internals, and then you have how far all of them have traded recently with both volatility and price action. Sounds like a lot, right? It is. But think about the first time that you learned how to drive. I know for me, I was looking at the end of the hood, just trying to stay in the lane and like really just being super focused on that one thing, right? But now all of a sudden, 6 months later, you got your arm out the window, the radio's on, and you could drive 2 miles and not even know where you went, because you could make all of those distinctions. That's what trading is at the highest levels. And that's what we do in the boot camp. I'm constantly going over and repeating it over and over and over again, so that all of these distinctions help you build better arguments for better trades. And that's really where trading becomes a profession. And I don't mean quit your job profession. I mean, it's something that you're in control of the outcome, because you could make decisions with the most information. And again, just to really bring this home, most new traders just look for a spot to get in. That's not a great argument. That's actually one of the weakest arguments that you could possibly make. When you start to elevate yourself up towards what we call hashtag trade like a pro, when you start trading like a pro, you're putting more pieces into the argument, and you start to get to the point where you're like, it's not meeting my criteria today, I'm okay with being in cash. Or The opposite of that was, well, this, and this is all there right now, and I have massive profit potential. Let's go get it. That's the difference between somebody who's struggling and somebody who steps up and really learns how to do this the right way. So it's kind of fun to talk about swing trading, day trading, and then the pieces that go into it. Bottom line is, if you want to make massive money, even if not massive money, even if it's just an extra $10,000 a month, there's stuff you need to learn. It's not complicated, but you need repetition. You need somebody walking you through it. And hopefully you're getting these out of the videos that we have on social media. And if you're in the community, this is what we talk about in real time, all day, every day, as well as in our coaching calls. So if you have any questions, definitely leave a comment below. This is a super important topic. I'd love to hear from you. Please click to subscribe to the channel. That would mean everything to me. And if you really want to take this to the next level, click down and learn about the bootcamp. I'd love to see you on the other side. Have a great day, everyone.